Right, time for the business update now, and Stephen Carroll joins me in the studio. Hi, Stephen. Now, we're starting in the US, where the White House has changed its mind on a major trade deal.
President Donald Trump has told the leaders of Mexico and Canada that he won't pull out of the North American Free Trade Agreement. Instead, he's agreed to work with America's neighbours to renegotiate the deal. The announcement came just hours after White House officials said Mr. Trump was considering an executive order to withdraw from NAFTA. He's repeatedly criticised the agreement, which is in place since 1994, for hurting America. Mexico's peso gained more than 1% against the dollar after this apparent turnaround in his thinking.
Well, staying with Donald Trump, he's announced details of his new tax plan.
The main plank of that, as expected, is a massive cut to corporation tax from 35% to 15%. The Trump administration is also proposing a one-off tax for American firms who want to move cash held overseas back to the United States. The White House says the move will boost economic growth, but may also slash trillions of dollars from the government's income. Nadia Massey has the story.
The White House has called it the biggest corporate tax cut in US history. And on Wednesday, the administration laid out the blueprint of that plan, focused on slashing corporate tax and implementing a repatriation tax in a bid to stimulate economic growth. At the heart of Trump's taxation policy is a dramatic cut in business tax, down from 35% to 15%. A strategy that the US Treasury Secretary said would boost American competitiveness.
Under the Trump plan, we will have a massive tax cut for businesses.
But a Washington think tank has cautioned that such a sharp cut in corporate tax would cost the US economy $2.2 trillion in lost revenue over the coming 10 years. Although the administration may be hoping to counteract any revenue loss with its repatriation tax, also announced in part on Wednesday.
We will have a one-time tax on overseas profits, which will bring back trillions of dollars that are offshore to be invested here in the United States.
During his presidential campaign, Trump said US companies would be taxed 10% on repatriated earnings, although no figure was announced on Wednesday. About $2.6 trillion in profits is currently thought to be held abroad, exempt from tax. Through the one-off tax, which has been backed by Apple CEO Tim Cook, the White House will be hoping to encourage domestic investment and ultimately grow the economy.
Well, for more on this, we're joined now in studio by Naeem Aslam, Chief Market Analyst with Think Markets. Naeem, thanks for coming in to see us. We've been waiting for this plan pretty much since Donald Trump got into the White House. What do you make of the detail that we've gotten?
Thanks for having me. Too thin and too late. That's what pretty much is. Yes, the information was really great to make flashy headlines, but was there any plan? Perhaps no. And that's what we have seen in the market yesterday. NASDAQ was hit 6,000 level, another record mark, and again another record mark. But the sentiment in the market is this planet really going to see the light of the day? Perhaps no. And how long that would take, and not to mention the big hole if this 15% corporate tax is going to leave. That's 5.5 trillion. Yes, they are saying this is going to stimulate the economy and we're going to have a much better growth, perhaps a 4% GDP growth, which he is targeting for. But the plan isn't there. It's just way too little details with them. And investors are really not chewing up on this one. They're saying, okay, we are not going to bank on any sort of investment just on the back of this plan for the time being.
Well, here in Europe, there's still obviously a big focus on the French elections. Is there still concern on the markets over the outcome?
I think market is getting a little bit ahead of itself, because right now what the market is pricing is that Macron would finally win the elections. But we know how reliable these polls can be. Yes, in the first round we have absolutely fantastic results, but the turnout ratio in the round two could turn out to be very devastating. And the biggest move in the markets, they always take place when you are not positioned for them. And I think this is the major risk, given the volatility, which is basically buying an insurance on the investment that you have. It is so cheap. we think investors should perhaps look into buying some of that insurance policy, given where the European markets or the US markets, wherever your investment is at record high. So perhaps it's time to buy that protection policy rather than just thinking that, okay, Macron is going to win the election. And on the 7th of May, if that doesn't happen, you're going to see a massive sell-off in the market, perhaps.
The euro is up by more than 1% since Emmanuel Macron led the first round of voting. Should we be watching the euro for more moves between now and the 7th of May following the polls, perhaps?
I think it's pretty much going to be driven by the polls, as you said, because anything in the poll which shows that, yes, Macron is still going to win the election. But let me remind you an intriguing fact. What happened over in the US? When the scandals about Hillary Clinton came out, you could see how the polls started to change. The entire momentum changed in the US. If any sort of a scandal comes out about Macron, that would put Le Pen in the lead. And I think that's going to impact the euro. We could perhaps see the euro moving towards the level of 105 or even lower. But if Macron does win the US election, the French election, then we could probably move towards 112 or perhaps 113 as well. So certainly that is a very optimistic picture for the French economy. You look at the soft data. What is the soft data? That's pretty much your consumer confidence, your business confidence. It shows that, okay, the picture is looking a lot more healthier with Macron being in the second round and winning the election. But perhaps how much he can drive in the parliament, as you and I were discussing before, that remains a question when it comes to June.
Just briefly, we've got the ECB meeting today as well. Is the French elections going to be a preoccupation for Mario Draghi?
I think a lot of people are expecting that he's going to be very hawkish coming into the next few meetings. But for now, we expect him to keep the interest rate low and the ongoing commitment to keep buying the asset on the market.
Okay, Naeem Aslam, Chief Market Analyst at Think Markets, thank you very much for speaking to us. We'll just take a look at some of the market figures as things are trading in Asia today. We've got a bit of a mixed picture in the Asian markets. The Hang Seng slightly above the flat line, small gains on the Kospi and Seoul as well, but falls on the Nikkei in Tokyo and the Shanghai Composite as well. Again, investors, Naeem was just telling us, seeing the thin detail in Trump's tax plans, no great rejoicing there on the Asian markets. Some more of the day's business headlines for you next. Shares in Japan's airbag maker Takata have plunged by 20% following reports the company may file for bankruptcy. Takata's exploding airbags led to the biggest ever recall in the car industry. Japan's Nikkei newspaper says the plan was to sell all of Takata's operations to a Chinese-sponsored new firm for $1.8 billion, leaving the company to focus on settling massive lawsuits. Samsung has reported its best quarterly profit in more than 3 years. The South Korean electronics giant beat expectations in the first 3 months of the year with an almost 50% rise in operating profit. The company expects bigger profits for the rest of the year thanks to a boom in its microchip business. And profits at Airbus, meanwhile, have fallen by half in the first quarter of the year. That's down to increased production costs and weaker prices. Airbus says it's still worried about problems with engines for its new A320neo, as well as exposure from its troubled A400M military aircraft.
Finally, Stephen, Amazon's electronic assistant is getting eyes.
Yes, the Alexa device has been a success for Amazon. Analysts say that more than 9 million of them were installed last year. Companies trying to build on that success now by ensuring that Alexa can do more than just listen to your commands, that it can also see you. The Echo Look camera will take pictures and video when users ask it to. It is raising privacy concerns, though. Amazon had challenged a court order last year to asking to hand over recordings from an Alexa device that was present during a murder. The company eventually agreed and the device's owner requested them, but there are lots of people wondering what exactly Alexa will be able to see. Apart from take selfies of you.
Yeah, no, it's a scary thought. Stephen, thank you very much for that. We'll stay with us here on France 24 live from Paris.